Hi, how you doing? Welcome to Tuesday. Not gonna lie. From last video, from Monday's trading gist, right? I didn't like it. I didn't like any of it. I didn't like waking up that early. I didn't like the way we did the building blocks. I did not like how we had to swap the position. We lost literally half. We didn't lose anything, but we lost the potential to gain double what we actually made that day. Not fun. So today, let's go ahead and just bring news up right quick. So it's there. Yep. So what did we see yesterday for news? We saw all of this. We saw the CPI for the euro. That was really it for the euro, except for this one right here, 2 CPIs, right? We saw Chicago PMI for the USD, right? But we didn't see anything else. A couple more PMIs. Nothing big. Well, today we have a lot more. At 9, we have the only FOMC folder for the USD. Yeah, that's the only FOMC folder we have currently. However, noting what happened yesterday, technically, yesterday should have been fine for us to trade. We should have had a well-established profit. We were wrong in our trade idea, and we would have been stopped out had I not have called it before we got stopped out. From that trade, we made roughly $1,000, which is not good because I had at first a 1 to 10 risk to reward, which was terrible. And then I flipped it and said, okay, we'll do this. Safer bet, safer odds. We know price is going up at this point. That risk to reward was a 1 to 3. Not even to 3. It was like 2.39, something like that. The odds were a little bit better, but it was already too late. We missed out on significant profit gain from a mistake I made early on in that video, and it is and will be stark the way we do things in not retaliation, but in learning from those mistakes specifically. Today we have a lot. We have a single FOMC folder. Again, we have 2 red folders. One's a PMI. Slightly concerned about that one. And it won't let me see, like, if I click on the folder, it doesn't do anything. Actually, I'm doing that wrong. It's this folder that I have to click on. Actual greater than forecast is good for currency. So for USD, should go up. That's according to PMI. That's per this folder specifically. Let's see what this does. Good for currency. Everything says the USD should continue higher. The USD is not Forex. It's not the S&P 500. It is not the NASDAQ. It just says that the United States dollar is going to go up in value. That's all this says. What does that translate to in the S&P 500 and anything else realistically? I'm gonna say the truth because it's quite apparent. I don't know. I really don't. So I want to be not painstakingly aware, but I want to be crystal clear. Today we're going to take a trade, but we're going to go slow. We're going to go very slow, and we're going to wait. We're going to wait a while. Because the past couple of trades, past couple of videos you've seen, even the one trade we managed to get $5,000 off of, right? That was a really good trade. However, that was also a day, if I'm not mistaken. Let's go back to news because you guys can still see news. Let's go Monday, Friday. This was our day. We had nothing for USD. I don't even think I checked the news. That's Saturday. This is Friday. I am wrong. Core PCE, personal income, personal spending. We had two FOMC folders. They did not come into effect until 12:15, 3:45. The setup on this day was golden. We had legitimately everything like go our way, and we came out on top. We had a serious profit margin. We had a very good, well-placed risk-to-reward ratio, and we came out on top on that idea. We murdered that market that day. With that being said, today we have a lot more than just the two FOMC. We have one FOMC folder specifically, and it's happening 9 a.m. So we should see significant price change at 9 a.m. I'm also looking at two red folders as well as an orange folder. None of these are acronyms that we should be avoiding, i.e., good, you can't see it. None of these specifically, with the exception of the FOMC. FOMC says it's good for the USD currency. However, here recently, and I'm going to pull this up right quick. Let's just look, actually. Where exactly? When did that hit? It was 12:15 Friday, right? So, Friday. We'll go right here. 12:30. Boom. Right there. So, FOMC, and we'll actually go ahead and check that too. Let's go ahead and just... Good for currency. And good for currency. Then, with that being understood, with that being the case, understanding as well that it is not the USD is not S&P 500, right? It's just not that. What we're looking for at the moment is this right here when it occurs at 9 a.m. when we get to take a trade. I'm looking for price to go down. I'm looking for price to go way, way down. And that would fall in line with this being our confluence. I want to wait. I've marked out all our highs and lows as well as the most recent high and most recent low. We have literally, I'll mark this right here just so it's out of the way. We have it. So, with this being the case, with everything that's been said so far, I want to wait. I want to wait for 9 a.m. and I want to see what it does. I want to see what market does. 9 a.m. is right here. We take our trade at 9:50. This is showing increments of 30. So I'm tempted to say I'm very, very curious to see what price is going to do within this price range here. Because this right here is our current price range from this line down to this one. We want price to hit a key level. We want it to close below the key level. We want it to wick it. We want to see what price is going to do. And per the day, let's go ahead and head up there right quick. Boom. We had a mini retrace. It did not create. We had a lower low here. or high or low, sorry, because we were in a downtrend. We had break of structure, official break of structure, with the exception of that right there. Yeah. Still, though, that's a confirmation. High or low there. We're waiting for price to come back down even further. I believe that is the correct bias to have, because per this entire, all of this, we are in fact in a solid downtrend, and this was a successful retrace back up, clear some liquidity. As a result, market makers have been able to move price back down the way they want to. Something I want to note as well, I am taking all of my confluences on TradingView, and I am not going to be using the app as a cross-reference. What I am going to do is watch TradingView and the app separately, independently, but I will not take my confluences on the app. I will take them straight from the S&P 500. I want to be profitable, and I want to have the discipline to know my mistakes when I make them. My mistake last video was I used the app as a confluence when I should not have. The app, from my learning perspective, is in essence wrong. It displayed the candles the way they needed to be, but because it was in real time, I was so focused on watching the app for the profit take, right? Which made sense until I threw it in there as a confluence. Oh, the app says it's going to go higher, which means on TradingView it'll go higher. That's the right line of work, but it's not meant to be a confluence. It's not to be an indication tool, though it can be. It's not meant to be that. So today, this video specifically, I'm going to continue watching TradingView. I'm going to peer at the app every now and then. I'm going to look at it to see what price is doing on the app, just to educate myself. Because in the end, when I go to day trade my actual money, I'll be using that app. I'll be using my broker. I'll be using my phone to buy and sell the shares I need to make a profit. TradingView is the chart work app that I choose to use. It is my tool to determine where price is going. And before I enter price from TradingView, I need to be quick about going from the 5-minute on TradingView to the 1 minute, or the 10, actually, because it's a 10-minute delay. I kind of wish there was a way you could put the 10-minute thing up there instead of the 5. Though it's too large a span of time to jump from one to the other. I can understand it. I want to be able to use the app in conjunction with TradingView, in the sense that when I put the building blocks up for this right here, right, I want to be able to go to the 5-minute and say, okay, from the 5-minute we have confirmed, just as an example, we confirmed a fair value gap, we confirmed breaker block, we confirmed order block or equilibrium, whatever, right? From that confluence, from this specifically being spotted and identified and confirmed, right? Subtract the confirm from that past sentence. We can go to the app and look at the 1 minute for a break of structure or an inverse for value gap. When we enter market on TradingView, it enters it on the candle that's currently available. So for instance, if I were to press buy or sell on this candle, it'll buy or sell on that candle. This is the candle we entered on. Okay? And when we sell, it'll be 10 candles on the 1 minute beyond this that we exit the market on. Make sense? We can go ahead and move this down now because the low has just changed. I want to really get into simply identifying this for what it is and understanding that the mistake I made, it's gonna get fixed quite fast. It has just been remedied. With that being said, we're gonna wait for market to open. That is 8 a.m. real time. We're gonna look at market to see what it's doing, if it hit either of our key levels, and I'll mark it out on my phone on the app as well. We'll do the same chart work all the way through, knowing 10 minutes is where we are. We have legit 7:45. With that being said, let's go ahead and do this actually. Okay. Looks like the chart's lined up at the moment. We're on the hourly, and the hour is saying that yes, price has moved down past this. Looks like we don't care about this level anymore. We're enticed by this level specifically, and this level is going to keep moving as far as this level keeps going down. Just to clarify, because we have a distinct price range we're looking for after market opens, and at which point we're going to be looking for a trade at 950. That's the current strategy. Let's go ahead and move that on this as well. Good. Is that the... Yep. This one here. Horizontal array. Boom. Good. From here, we're going to mark this one here, just to have a clear picture as to what exactly is going on. Boom. Boom. The only thing I'm going to be using this app for, there are two things. I'm going to be using it as an indicator that and confirmation that we have, in fact, one of the building blocks, right? because right now, per the hour, this app is in line with what you see now on TradingView. It is 100% there. Nothing different about it. What we're going to use the app for specifically is confirming all of these building blocks. So when price hits a key level after market open, or actually right here, right? We'll go down to the 5-minute time frame. On the app first, we'll look for one of these three, right? At which point we'll go down to the continuation confluence, right? And we'll wait, because typically the continuation confluence is the confirmation that price is going to continue in a direction. The confirmation at that point is going to be the break of structure and inverse fair value gap, where we will look at the app to see that break of structure as we're marking out the continuation on this here, right? Continuation will be marked. And once it is, we're taking all of it down to the 1 minute. And on the app, I'm going to find the break of structure or the inverse fair value gap. Once one of those are identified, we will enter off a trade. Per previous price action and data displayed, when an FOMC folder hits, price tends to want to tank. That's just how it is. So I think at the moment we are looking for a sell position. We're looking for a short. Just because on the daily, again, we are at the end of a retrace. We're on the way back down. On the legitimate, on this right here, we just came up, made new high. We're on the way back down. Everything is in line with the daily bias that price wants to continue moving down per the trend. From here, it's a matter of waiting for one of these key levels to get hit. And we're looking at this key level and this key level. Why? Because we have our session highs and lows. If price wants to hit either this key level or this key level, right, it'd be unfortunate for us because, one, we have legit this price range per the session, right? But that's also profit we could have from a trade later on. And we could try and snipe it. I want to try and snipe it, but I don't think it counts. It wouldn't be... It wouldn't be as worth it, in my opinion. Because right now, if we were to look, right, what would we need to know about Asian session? Well, it would have needed to hit a previous higher low, but price movement is just garbage in Asian session. I'm look, it's in a straight line. It's not up, it's not down. It's just, that's how it is. So on this session specifically, when we get our session open, we're looking for price to come up, wick one of these two, or go down and wick one of those two. And from there, it'll tell us, hey, yes, price is wanting to continue much, much further down. On the hour, this was the leg down here. As you can see, we did not sweep this liquidity here, and we swept this liquidity, but we didn't sweep this one. So what I think is going to happen is from this mode here, price is going to continue moving down, but what I think it's going to do beforehand is it's going to consolidate back up. 9 o'clock is going to hit. 9 a.m. will hit. Once it does, we need to be looking out for beforehand. Actually, we'll be looking before 9 a.m. The back up to this, right? Because it's got to sweep this liquidity, and it's going to come right back down. The sweep is the sign of reversal. Technically, it did, actually. This candle has already swept this, so we technically already have that sign of reversal. Price is going to continue moving down. From here, we need to be looking, if we were to use all the building blocks to predict what price is going to happen, we'd be looking for a break of structure, inverse fair value gap, or an S&T divergence. Right now, I see small fair value gap from here to here. Not seeing another fair value gap within any of this. So what I think is going to happen within the next couple hours is we're going to have another candle here open up and then close below this line, clearing below this, making an inverse for value gap. From there, we'll be looking for continuation, which it will display itself either through a fair value gap back to the upside, or we'll be looking for a retrace, which means it'll go back up, breaker block, it'll be a small one, failed retrace, and it'll continue back down, or an order block where it will rise up, sweep the liquidity off of this high specifically, like we were stating before, and because of that leg up, we'll have sweep down. And if we can't identify any of those three to confirm, double confirmation, right? We'll move to equilibrium. We have our high, we have our low. Boom, we'll wait for price to go within premium. Sell, continue down. Actually, because equilibrium will have been hit, once it hits premium, we'd be looking for the 1 minute on break of structure or inverse for value gap for price to continue moving down. Yeah. We have 3 minutes before market open. I went to sleep at 6 a.m. 6 a.m. 6 p.m. last night, and I woke up at 12 a.m. today. I've been awake ever since. Very, very much so debating on like not sleeping all the way till 10 p.m. This way I can edit videos after I get through posting this. I can schedule out like 5 videos. I'll post 2 publicly, one for yesterday, one for today on both channels, and then I'll have 3 more scheduled for Wednesday, Thursday, and Friday. And then from there, on Thursday, I'd be using Monday, Tuesday, and Wednesday for the next week. That way I'm back to being 3 days ahead of schedule. And this time I'm not changing my sleep schedule again. Like I didn't want to wake up at 12 a.m., but I did. I've been awake all day. Today, because I intend to blitz through just editing videos, just getting down like cutting up videos and actually mashing them together, right? I am wanting to stream as a makeup for Monday, makeup stream. With that being the case, be on the lookout for that. Chances are this video will be posting as I'm streaming Tuesday, today. So be on the lookout for both once that's the case. Yeah, we'll be streaming for 2.5 hours, just so we're on the same page. And we'll be playing Warframe, just so we're on the same page. We'll be playing Warframe. I want the video to upload completely before I go ahead and say, oh yeah, let's just do this. Start streaming. I'm gonna have an idea that I'm gonna do, and it's gonna be good. It's gonna be good that I do it. It's gonna be worthwhile. Pre-market open. Per pre-market open, first candle on the app says up. This is on the hour, by the way, just so we're on the same page. Again, 9 a.m. I think price is going to go down because of the FOMC and the general bias is down. We're looking for a short position, which lines up with current price action being within this and the fact that we have a resting stop of liquidity here that is begging to get claimed. What I think is going to happen, though, is price is going to come up. It's going to close above this, kind of like what it did before, right? We're going to look for it to peak from here. It'll sweep that, actually. It'll invert this fair value gap here, right? It'll close above this. On that notion, for the 5 minute, we'll go ahead and hit. Actually, it'll actually inverse this fair value gap right here because we've already got the liquidity sweep. So this right here is the inverse. we'd need to wait for it to go up and then invert this. And then from there, we'd be looking for continuation confluences. Again, I'm not using the app as building block. I'm using it as a consultant, if you will. The app displays where price is going to go on this chart specifically. Before we do anything on the app, we're going to look for the building blocks on the SMT, on the trading view, so that way we have the building blocks in front of us. After the final building block on the 5-minute is taken care of, I'm going to move to the 1-minute. Let's go ahead and do that now. Actually, let's go ahead and just settle on down to the 1-minute. On the 1-minute time frame, what would we be looking for? A break of structure or an inverse for value gap. We've already discussed how before market open, this right here is its key level. I'm looking at the 1-minute on the app, and it is steadily rising into an uptrend from this up. So that's what we're waiting on. I am going to wait a little while because I think what's going to happen is it's going to consolidate, right? And as a result, we're not going to see anything on either chart until 9 a.m. hits. I'm on the 1-minute for this. Let's go ahead and go to the hour just to. So when 9 a.m. does hit, we have a quick reference. Oh, it hit. This is what price did. Now we're going to take action off of it. And from there, I'm going to actually not close the app, but I am going to transition apps. I'm going to pause recording. And we are going to wait patiently. Not till 9 a.m., but actually, yeah, till 9 a.m. because our trade time is 9:50. That's when we take a trade. So we'll be right back. So just an observation. That should be recording me now. Good. Okay. So just an observation. On the hourly specifically for this chart and the app, because they're saying the same thing, right? We haven't hit either the price, any of this yet. Just wanted to look at this for a second. We have a huge leg down, and on the hourly, there is no up until way down here. There's no up arrow, candle. Price did not move up for this entire leg down. This leg down created an imbalance here. Good burp on my part. And we didn't break structure until this candle here. Right? So what that says to me is on the daily, if I'm not mistaken, if I were to zoom this out and look at the daily, I'm pretty sure this right here would be one green candle. Like this whole move would be a small green candle. And this right here is the start of red candle. Look at that. Called it. Wait, no, this is per the day. How many candles are in a day? Well, if we want to consider 8 hours. Like down. Green candle. Right? And this right here. Back and forth. So what am I looking for exactly on this? Or better yet, on this? That would sooner justify me saying, yes, price is going to continue moving down. I'm looking for a liquidity sweep to the high side. That'll come in the form of price moving up and wicking or closing above a high made already. Technically, we already got that right here. We had a leg up, boom. Didn't really sweep any liquidity over here, but we had further retrace back down, a move back up. From that back up move here, we got a closure above this high here. With that being said, I believe this is a valid liquidity sweep, which is the sign of reversal on this up here that signifies price is going to continue going down. For today's market structure, what I think is going to happen, because we also have an FOMC and it's supposed to be good at 9 a.m. for the USD, and that typically means price is going to go down on the S&P 500. I think price is going to come up, wick this, potentially close above it, and then barrel back down. So, what am I looking for again, specifically? I'm looking for a retest of this level here. Price will come back up and wick this. Once it does, we're looking for that 5-minute confirmation, break of structure, inverse fair value gap, that price is in fact going to continue moving downward. From there, it's just a matter of hunting down specifics. Technically, we've respected this fair value gap right here, and it was not actually, yeah, it was. This was to invert this fair value gap, which by the trends means is confirmation of continuation. Price is going to continue moving down off of this fair value gap here, inverse fair value gap now. So we can't take either of these for confluences, but we can take this move here, which is a sign of reversal. And again, all we're looking for is the price to come up, retest, barrel back down. From that point, I think it's safe if we go ahead and pause the video again, pause recording, so that way it's as quick as me click, boom, yay. I just wanted to note there is a fair value gap up here that was not the inverse of anything over here. So technically there is an imbalance right there. I want to see what price is going to do before making any assumptions. If I had to guess, when news hits, price is going to actually go up. It's going to close above this fair value gap. I think price is going to go well above this fair value gap here. And when it does, we need to be on the ready for taking a short position and watching it barrel back down to further this, right? We've been on a downtrend for a little while now. And again, the daily is supportive of the fact we are currently in a downtrend, and this is a continuation move down because we just had a successful retrace to the upside. We had a breaker block here, fair value gap that filled a order block there. Liquidity sweep, price barrels on down from this move up. We have not an order block, but a confirmation that price wants to continue moving lower. Yeah. Am I confident in this? Yes and no. Yes, because when I say it, when I look at it, when I point out this right here as a sign of reversal, makes sense. Right up until you get to, well, no, because we said this clears this. It's right up until we get to about this jumbled mess right here, right? From this candle all the way to this candle. Doesn't make sense to me. I know these two candles are signs of, they're essentially called doji candles. These two are signs that market doesn't know what it wants to do. We know price moved as low as this, yet it closed high. We know it moved as high as this, it closed low. Market doesn't know what it wants to do. So it needs a catalyst, a news entry, something different. And that's what we're waiting on now, is the 9 a.m. mark where news becomes relevant because we do have an FOMC folder and we're hoping that changes the market to the downside. If that is the case, that works in our favor. We know that on this candle specifically, we'll have a crossing of this key level here, at which point we can go ahead and start building blocks because, again, we're looking for price to continue moving lower. And of course, using the previous confluence that we do have a liquidity sweep here, we need to also be aware of a liquidity sweep to the downside. Down, up, boom. We're waiting for, this would have been a sweep on this closure here. If this candle closes below this, we know price is going to continue moving down per this liquidity sweep here. At which point, we know that there is a break of structure on this candle. This is a well-defined break of structure. Why? Because we had a higher high here, and it was closed below off of a green candle moving up. And we can have multiple candles moving up. So long as they close below this, we're gold. This is also a fair value gap that is valid. There is no inverse happening here. There was a breaker block that this may have filled. What I think is going to happen is this is going to close. The next candle is going to open, and we're going to see a large down. We're going to see it wick the down, sweep the liquidity on the low side. And what I'm going to say is going to happen, what I think is going to happen, I think price is going to follow the bias we had a second ago, where it's going to come up here, clear this first. It'll go up past this. It might wick it. It might continue up to here. It may even continue up to here. From that, it's a matter of waiting for price to either continue lower, which is the general trend, but we're trading within the trend, right? So we're looking for continuation of trend. What would be sign of reversal? That price has swept liquidity on the downside, and from it continues higher. We've already got a break of structure for this candle here. This candle was our break of structure going up, which shows a sign of change, that market's going to be different. However, I don't think we can count it as a sign of change, because yes, we may have broke structure here, but it wasn't until it was this right here, this one candle, right? Because we had a huge leg down. And then it was this leg right here. It continued down after this leg up, and we broke structure on that candle, right? From this, shot way higher. This was the change that this was indicating about. Now it's just consolidating. So this might actually be a defining moment in what market wants to do. I'm confident up until literally where we are now, identifying what market wants to do in the time that's here now. If I had an idea, I think I'm right in that price is going to continue higher. It's going to close above this key level specifically. From it closing above this, we'll see price continue moving lower. Because again, this is a retrace. We are in an uptrend until we get to, nope. Because this is a lower low. So we haven't really broke structure until this candle right here. And it could be another 3-4 candles before this closes up above this, inverting this for value up here. We're on the hourly, simply waiting for it to queue up. So we'll go ahead and pause the video, and I'm gonna go ahead and look at some videos on YouTube and see what I can do to further learn how to determine what market wants to do based off of a move that has context behind it and is valid in its current state. Videos, learning how to do stuff. Not this. Let's go ahead and minimize that because flashbang in the face doesn't feel very nice. So just watch his most recent video on order flow. Not even a third of the way through it. I think I get the picture though. Not the daily, per the hourly, right? Because this is all high time frame. We have each candle representing an hour. Per the hour time frame, we were in a bullish order flow, constant downtrend. We broke structure on this candle here, disrespecting order flow, says we're going higher. Because now it's disrespected, we're looking for the current order flow, bearish, to be respected. How would you respect bearish order flow? Without breaking structure. Higher high, higher low. Up down, higher high, right? We didn't break structure. Oh, no. We did. We did right there. Did we close below that? Yeah, we did. Yeah, we did. Did we close below this low right here? Because this was the most recent low. Did we close below that? No, we didn't. So right now, I'm looking at a respected bearish order flow, which means price is going to continue higher. How high? I'm looking at an imbalance that this could fill. So per the 1 hour, specifically, comment section, we're looking at an uptrend. We're looking at it completely going up. And yeah, we're waiting for, again, our key levels here to get hit. Once they're hit, we're waiting on, we're actually doing just that. We're doing exactly that. We're waiting for it to get hit, and then from there, we scale down to the 5 minute, look for a break of structure, right? Which means we have to wait on the 5 minute after it's crossed for a low to form, and then from that low, a lower high, because we want it to come down, right? After which, we'll have a 5 minute continuation, or better yet, because it will have been a fair value gap on to the upside, right? We'll be looking for an inverse fair value gap, which means on the 5 minute, there will be a large candle, gap, right? And it'll be a distance. It won't be the same candle that closes above this fair value gap here, creating this inverse fair value gap, but it will be a candle nonetheless going higher, creating a fair value gap, right? And as a result of it being that special candle, that will be our go-to to swap down to the 5 minute for fair value gap, break of structure, or breaker block, order block, or equilibrium. And yeah, that's pretty much what we're looking for at the moment. We're looking for this to get respected, which means it cannot close below this current low now, because we did not close below this low here, right? And the closure was valid. Although price went down as far as this, completely fine. We're looking for continuation of price to the high side, right? Because we did, in fact, sweep liquidity to the low side, which means reversal. Price is going to go higher. We did get an order block, which caused this liquidity sweep. So per the hourly, I'm looking for price to continue higher. Per the hourly over here, I'm looking for price to continue higher to fill this imbalance, at which point I am confident in saying that we will have a fair shot at making a decent trade off a long. That being said, let's go ahead and put our I don't feel comfortable doing that. Those two are gold where they are. We have these two here, an imbalance there. I think those levels are fine the way they are. We're just waiting now. I'm going to pause the video again. I just wanted to Now that I've watched the video and learned a little bit more and clarified for myself, for my own confidence, that what we're looking at is accurate in our best judgment, we'll be looking back and forth between videos and this today just to have my confidence where it needs to be and to allow for the best outcome on this trade specifically. Be right back. Something to note. Just something to throw out there, something to, this is my personal note on it. I just got through watching a video on, well, I didn't just get through watching, I'm still watching the video. We have 950. It's time to look for a trade. We haven't hit any of our key levels yet, so I'm going to wait patiently. Per news earlier in this recording, we checked it, and we saw 2 FOMC folders. I'm watching the bootcamp video detailing news, everything about it. And we just got through with the filters on that video. There were some things I forgot, and they needed to be known. I understand not to count any of the yellow folders because they're random news events that don't really affect markets, so they're gone. They're out of here. From this point on, we should only be seeing orange and red folders, and our 2 no-no squares are CPI, PPI, FOMC, and NFP. Any of those present themselves, don't consider trading. News is now set up. In the event we wind up next video with a long list of currencies that we don't trade, we'll go ahead and reapply those filters mid-video, so that way we get the best results off that site. And at that point, we'll consider trading for the day. Just wanted to add that note. So, learning a lot. Learning a whole lot. I'm probably going to continue watching this video, but it's worth a video to look at this and see what exactly is happening, because this is relatively new to us, right? Yeah. Okay. I see what's happening now. Okay. This is information that I needed to know and have learned now. So, per TJR's video, when you see a red folder or orange folder, regardless of what it is, wait 20 to 30 minutes after market has had time to adjust to those folders, right? Because when they drop, price is going to go crazy. Unpredictable. You try and invest that day, you're more likely going to get stopped out. So we're playing on the safe side, defense side. With risk management in mind, we're taking this as seriously as possible. Though it affects market, the general rule is, regardless of folder, so long as it's red or orange, always on red and orange days, wait 20 to 30 minutes after they've come out for price to settle down and develop. From there, attempt at looking for a trade, but don't go in thinking you're going to make one, guaranteed. For CPI days, and I have yet to reconfirm this, any news day, FOMC, PPI, FOMC, PPI, CPI, FOMC, and non-farm payroll, NFP, those, for any one of them present, buy. Not even going to try it. Today, per USD specifically, looks good. It looks okay. I'm not seeing NFPs, I'm not seeing FOMCs, I'm not seeing PPI, I'm not seeing CPI. So, technically, we should be good. The bias is price is going to go higher. We need to wait 20 to 30 minutes after these folders have dropped to take a trade. Slight problem, slight variation, right? Per old TGR and new TGR, I'm pretty sure the two have said the same thing, bootcamp and current videos. Our trade time is between 9:50 and 10:30, which means if we can't find a trade before 10:30, we're not trading that day. This right here hurts to see because I was actually looking forward to take a trade today. I was looking forward to it. But now that I know how to set up this filter system and actually see the news for what it is and not get blindsided by anything other than what's here at the moment, this is going to be more of a consistent, okay, we're going to set this up, boom, here's news from there, let's continue on, right? I mean, you could see what I'm looking at right there. You could see it. Yeah. That folder, so let's just go back to news right quick because this drops at 10. It is currently 10. 9:45 dropped with a orange folder of PMI. Let's go ahead and hit our 5-minute at the moment. That is not. This is what I'm looking for. 9:45, which was this one right here. Big move. It was rat. It was the rat. Here is 10. We should see another big move on this candle here. We should see a large move, very, very large move on this candle specifically. Again, we're going to wait 4 candles, 20 minutes for price to develop. After price has had time to develop those 4 candles, we'll go to the hourly, see if prices hit any of our key levels. At that point, we'll be looking for a trade. If by 10:30 we cannot find an entry, we will not be taking an entry, and I will see you guys in the next video. I think it's best if we look at what we have 20 minutes after 10. This is what we're going to do. We're going to look at it. We're going to watch it. We're going to see it. We're going to observe it. We're going to see what price does. So in the end, the result is we have price action. We can align to news. So the next time it occurs, we have a basis to work off of. Not saying we're going to take a trade off of it, but for today, because I am learning this and would like to be a profitable trader, I'm taking the boot camp advice seriously. This is 950. This is a delay candle. Let's look at the app and see what's going on, seeing as its current price action moving. Large wick down. So all those folders occurred at 10. That's currently what's happening to the market. All those red folders pushing price way down. That's like on the chart specifically. That's like over here. That's like, yeah. That's 950. This is 950. 1, 2. Price is lower than this is right now. It's about, it continues going the way it is, it'll be lower than this candle. It'll close below this low. And again, we'll wait 20 minutes to see what price is going to do after this candle close, just to see what happens. The general bias for the 5-minute is up. We're looking for a long position. Everything about this says up, long position, right? This was a respected fair value gap. It was not closed above. Per news, it could continue lower, though we do have a second fair value gap right here. That is an inverse fair value gap, so we can't count this. This right here is a valid, though. That was respected. So per news, it might actually continue much lower. We are going to see exactly what happens per the app, though, and ensure that when we do the work on TradingView, we're still getting the best trade. Looks like price dropped like all the way down to this wick here, right? We saw price on this candle specifically drop down, but it wasn't lower. It's above this wick. We need to wait exactly 20 minutes. Not a minute less. News has dropped. It's 10. I'm looking at 10:04 on my clock now. Looking at 10:04 on the app. Let's see what it does. I'm going to go ahead and pause the video so it's not a waiting game. Beep. Okay, so because of news on the app specifically, we have crossed our key level. That's on the 5 minute. Let's go to the hour and see if that's the same gist. It is the exact same on the hour. We crossed below the bottom key level, which was this white line here. We're 55.71, so we're like way. We're like right in this. Right now. Holy crap, that is a drop. And that's on... I'm looking at the hourly at the moment. The 5 minute, we are 55.73. So right about there on this candle. We're on the fourth candle. Right there. Currently. We're dancing on the app on this key level here, actually. Wonder why the price differences are... Like, the price is different. In any case, I'm looking at a large... 4 large candles down. For our bias to be correct, the price is going to continue moving higher. The low would need to be respected. Currently, it's being disrespected on the app. However, it hasn't closed below our key level yet. So, it depends on the candle closure, what price wants to do. If it closes below, we're looking for continuation moving down. If it closes above and there's only a wick going through the line, then the bias is still correct that we are in fact going to have a large move up. It was a news day, but I'm looking at it and I'm not seeing, aside from the 2 red folders we have, any news on the USD saying specifically that we can't trade. With that being said, we're taking market into account. We're looking exactly at what is going to happen to market. Let's go ahead and I'm going to mark the, not the horizontal beam, vertical line. Boom. 10. So 10 was marked. I'm looking for 4 candles immediately after that. First candle did not close below this right here specifically. So right now, as of right now, the price is respected. The trend, the move is respected. So we should see price continue moving higher. We're waiting to see what's going to happen on these next 3 candles. Looking at the one forming now, we got 4 minutes, 30 seconds for it to close. And you'll see here on this chart per the screen specifically, this is what? 1, 2, it is this candle. This candle is when news dropped. We're going to see price book it past, it won't pass the line, but it will close just above this line here on this wick, right? Or close right there. The next candle closes just shy of the line. And then right now on this candle, we are currently beyond our key level. Per news, it could be filling, like looking at market and what it could be doing, it might be clearing this for a value gap right here. This small gap between this wick and this wick here. because there is still a small imbalance, and we can actually assert from this low here our key level, that right there being a thing. And that candle's just about that distance. So, that being said, I think we'll see a candle on this chart specifically go below this, right? It'll close somewhere in there, and it'll consolidate for a second, and then it'll continue moving higher. Again, we're looking at 2 candles at the moment. One is on the way to closing below, and we're looking for a strong reaction going back up to the upside. We had a fair value gap here that was inverted per the effect of news, right? And of course, this was a news candle as well. News was dropped at 9:45 as well as 10, right? This candle is the effect of news. Looking at the app specifically, we're down here currently with price, and it's just continuing lower. We still have a 2-minute, 15-second timer on it, so it's just a matter of waiting for it to work its stuff out. It wasn't until after news, 10 minutes after news, that we broke through our key level. We had a setup for a long, and it disrespected order flow by going lower. It disrespected this order flow specifically by going lower than this. However, I do still think that price is going to rebound off of that because, again, we still have an imbalance up here, specifically on a higher time frame that price wants to come up to and resolve. But I think I'm wrong again. This is an inverse fair value gap, so we can't take this. This right here is a fair value gap that was cleared with this candle here. This was news clearing it, and per this candle here, it's clearing another fair value gap lower way over there. So I think this will be the balanced point, the balance point of it all. It'll consolidate in this, I think. I think after this video, I'm going to go ahead and head into editing gaming videos, and then also like chopping up a bunch of these videos specifically. I'm also thinking about, what's it called? Privating all of these longer videos on this channel specifically, so that way I can place them onto Patreon, and from there have them set up as content on Patreon. I'm looking into the limitations of posting long form videos to Patreon. So if you wind up seeing a bunch of videos here but not seeing many elsewhere, chances are it's because I've had to move them, and as a result of the limitation, keep them on a cycle. Second candle's closed, and it did in fact disrespect order flow. We are far below, but continuing trend on the daily. Currently, price is barreled past this point here. I imagine It might be gearing up for a reversal. Because we had a break of structure right here indicating change of trend, so I'm thinking on the daily, this is going to continue down and sweep this liquidity. I'm going to mark this as like a liquidity just here, right? If during this week we have market price come down, right, and sweep this liquidity here, I imagine either it's going to continue or we're looking specifically for a wick to hit this, but not a closure below. If it wicks this on any like of these days here, I'm tempted to say we're going to see a huge reversal going, because this reversal would have been confirmed. If we're to use the same confluences on the daily, let's say it wicked this, what's our confirmation? The order block. Price is going to continue down all week and hit this. It'll probably, I've already said it though, it would consolidate. It would make sense because it's already filling some imbalances over here. On the daily time frame though, it's not doing that. So although there is an imbalance up here that does not fill. No, it does, because this was a fair value gap and this closed below it. So this would not be technically considered an imbalance. This right here was not closed above, so no imbalance there. We had this right here that was inverted on this candle here. Price continued higher, took out liquidity sweep over here, and so price continued lower. We had fair value gap there, was closed below on this candle specifically as a result of not inverse fair value gap, but no, inverse fair value gap because of this right here. This was a inverse fair value gap. So yeah, leg up, leg down, liquidity sweep. So this leg up would have been an order block on the weekly. This is going to cause a liquidity sweep here, and as a result of this sweep, we should see price rally higher, potentially taking out this liquidity here, maybe even climbing back up to this right here in the coming weeks. As of right now, for the hourly, we have hit key level. I'm looking at the app right now. I'm seeing that same candle. We have 20 seconds left. The market is indecisive 15 minutes after news drop. We went 2 candles far below the thing, and price is having fun at the moment, just dancing. We do have a bit of S&T divergence per the NASDAQ at the moment. This is on the 5-minute. Let's get on the 5-minute for both. Whee! Boom, boom. Looks about. Yeah, it looks about the same, different to me. We had an S&P divergence right here. NASDAQ says price wants to move higher. S&P says down we go. NASDAQ is not lagging but telling the future that price does want to continue moving higher. I'm looking at the app. We are now on the 20-minute candle, 4 minutes away. It's 10:20 in real time. I think if we went for a long position now, we'd be sorely disappointed and would lose out on this trade. I'm 100% going to de-risk today and not trade per current market action at the moment. We're sitting on the 5-minute, and this is currently holding true to what the app is saying. I am currently 2 candles ahead of this market per the app, right? Because 10-minute delay, right? 5:10, right? Because of where that price is at the moment, I don't feel comfortable trading today. Would it be prime time setup though? Remember, our bias was to go in for a long. We swept liquidity on news and then watched price plummet. Our order block on the 5-minute would have been this red candle here. Order block, liquidity sweep, price plummet. We have within this price movement fair value gaps galore. So what are we looking at the moment for? We're looking for an inverse fair value gap on the 5-minute to take a trade off of. News could have also presented us an order block with just this candle here. Large candle up, not just sweeping liquidity here, but as a result of this order block, we also swept liquidity on this here, right? From this sweep, we're going to see price venture down a little bit further. We'll see a small block form right here. And then this candle right here is currently making a retrace, a green, going way higher than the previous candle on the app. We have 40 seconds. If it closes above that fair value gap, it'll be inverted, in which case price is going to continue in the opposite direction. It will continue in the up direction. From that point, we'd be scaling down to the, we'll stay on the 5-minute, of course. Look for a fair value gap, break of structure, or I keep calling it break of structure. It's breaker block, order block, or equilibrium. We're priced to go back into equilibrium. We're waiting for it to come up in discount. So we'd be from here to here, wait for it to hit discount. For the long position, we'd press buy and watch it soar higher, because at that point, it will have had time to form the inverse fair value gap as well as break structure to the upside, right? We could also have a break of structure on the 5-minute because it was a news drop. So I think inverse fair value gap is correct. We have an inverse fair value gap over here. We're looking for a break of structure. It created a new low. You can see that here, actually. Because it created this new low specifically, we're now waiting for it to create a higher low, which would break the structure of this move down. We'll see price move up. Currently on the app, we're above this, and it looks like this is green on this. Oh, it's got 4 minutes. What am I high on? I'm sorry. This is going to be a red candle. It will close a red candle. This is going to be a large green candle. This will be a smaller green candle. I think we're going to see a break of structure, which means a higher low, before that candle, after that candle closes. I am learning this. I am not advising you on anything financial. Take that idea, go somewhere else with it, because I'm not here to advise you. I'm here to take notes, learn for myself, and be a profitable trader because I'd like to have a decent life. That's just me. Prices re-entered that key level, the same one we broke through on the downside from news. It is now 10:27 real time. We have 3 minutes to find a trade. And I'm slightly concerned because the order flow was disrespected per news. Can we count that as disrespected on news, though? Because I'm unsure of it and I'd like to de-risk, I don't want to lose this trade. So what I'm going to do is I'm not going to trade today. What I am going to do is we're going to watch. We're going to watch what market does. Because working off of what TGR says on his boot camp, wait 10 to 20 minutes after news drops and then potentially look for a trade. Within the parameters of 9:50 and 10:30 being our times to look for a trade and not look for a trade, I'm going to stick to those parameters. Safest bet, safest window, best outcome for everybody. I no wish to lose money, and per what market's doing now, I do believe we are going to miss out. We are not going to miss out. We're going to keep what money we have in our pocket and not waste it spending it on a trade we think might happen but won't. Again, this wasn't a major news day. It wasn't like it's CPI, PPI, FOMC, or NFP. This was a double red folder day with no FOMC, with none of the four. Double red folder, double orange folder. Currently speaking, it looks as though we're going to have that break of structure I was mentioning before on the 5 minute. It looks like it. Market does not know what it wants to do at the moment. Don't worry, I will let this play out on TradingView. It'll be another 10 minutes though for it to do its thing. Looks like we did get a break of structure. I'm not going to speak too soon. We have that green candle that's forming now. That's a true green candle. The candle I'm currently hovering over, that's going to turn into a small red candle. It will create a new higher low, which will be our confirmed break of structure to the upside. From that, we're looking at 5 minute continuation confluences, fair value gap, breaker block, order block, equilibrium. Waiting for fair value gaps to form through large candles moving upwards. We're looking for a breaker block, which means a failed retracement to the downside, which I believe we got off of that break of structure on the 5 minute. We, of course, already have our order block on news. It caused the liquidity sweep on the downside. We have technically already found a break of structure. Well, not on the 1 minute, though. We're looking at the 5 minutes. So let's go look at the 1 minute, see what's happening there. So we did break structure on the 1 minute to the upside. Confirming break of structure there. We made 2 higher lows off that leg down. The breaker block confirms that. Order block, leg down, sweep. Price took a hike. Tested that. For the higher confluence. Price should continue moving much higher. On the 1 minute, we're looking for an inverse for value gap, which I am currently looking for. It should actually form within these next couple of candles. And again, what we're looking for is for market to hand it to us, right? We have 45 seconds for this one candle to close. I'm looking at a fair value gap that has not been touched. If that fair value gap can get closed above, that would be an inverted fair value gap, which we could enter off of. And then from there, our trade idea would be all right. And right now, price is dancing around the key level. It's like up in this, just dancing in it on the 1 minute. It is 10:32. We can no longer take a trade today. I'm going to go ahead and close that because we don't need it. But we are going to sit here and continue watching market to see what happens. I'm looking at my phone. You can look at trading view. I'm actually going to show it on my phone and trading view so that way you know what's happening and where. I think it was a good idea of me not to take a trade today. And it was a very good idea for me to take this video. So that's what I'm currently looking at right now. It might be a little bit too close. Sorry. If it's not focused, I'm sorry as well. So what I'm looking at is on the 1 minute, the leg down that we're currently looking at right now on this chart, right? This leg down stops here. It stops and sweeps liquidity there, right? On the 1 minute per this same move, we have one massive leg up. And what we have is a breaker block, which shows lack of sell orders in the market due to this huge thing. Price continues to take a hike, retests it, but because it's dancing around accumulating price, right? We're not getting the fair value gap, the inverse fair value gap we would have needed in order to achieve our wanted goal of buying in and going long, right? What I think is going to happen as a result of news, price is going to continue lower. It'll accumulate this right here, but per this general trend down, it's going to continue lower. And as a result, if we had tried to take a long off of this, it would have been a mistake because we're not getting the inverse for value gap we're needing. It would not have happened until after 1040. That's what I'm gathering from this, and it didn't close. 7 seconds. 3, 2, 1. There you have it. I'm gonna zoom in so you can really see that. It's hard to see, but on the left-hand side, you can see a fair value gap in red. On the right-hand side, you can see a green, sorry, it turned into a red candle. The red candle that formed just below the one that's currently going crazy right now, right? That red candle was green. The price went up into the fair value gap, but respected it. It did not close above it as a green candle. And so the inverse fair value gap was not a thing, is not a thing. Because of that, I'm confident in saying if we had taken a trade today, we would have lost out big. We would have. With that being said, I hope you guys enjoyed the video. If you learned as much as I have, drop a like. Comment below what you think I could have done to foresee this without news. Because we got a legitimately a authentic reaction off of a news drop. 2 news drops. This one candle, and then at 10, this candle right here, right? Price was already on its way down per this right here. This is when news took place. And here we are 20 minutes after. This is on a delay, and you can already see price wanting to move even further down on the 5-minute. Yeah. If you enjoy this video or any of these videos that I've been posting here the past couple of weeks, please note that, 1, these longer videos will not continue to be posted on this channel. Instead, they will be hosted on Patreon. I think, put those words in bold, I think they will be posted on Patreon for the sole purpose of having them there so they're all located in one spot. This channel, I never wanted to have hours and hours of long video. I just wanted to have fair, adequate, just 20, 25-minute long videos that you can enjoy. With that being said, be sure to check out the Patreon because I have posted 1 post on there and I'm not getting the engagement I'm wanting off of YouTube just yet. And it goes a long ways to actually support me keeping the lights on. Further delving into this and, of course, learning how to be a profitable trader. With that being said, if you're interested in learning any of this investing stuff, kind of like the way I am, I highly recommend going to TJR Trades channel. Links to his channel can be found in the description below, right under the @ to my channel. Go look at his stuff because he has made a lot of money in the short span of time he's been doing this, and I feel like I can do the same. If you feel like you can do the same, be sure to try his boot camp out. You won't be disappointed. And if you are, it's okay. He explains that trading is not for everybody, and literally 97 to 99% of people fail anyway. So take it with the grain of salt that a lot of people fail at this, and it's not meant for everybody. If you think it could be for you and you want to try it out, you feel free going to his channel. He is not a financial advisor either. He's just there teaching a trade. That's literally all he's doing. With that being said, thank you guys so much for watching. I appreciate you guys for sticking around to the end of the video, even though we didn't take a trade. I learned a lot from this, and I hope you did too. I will see you guys in the next video. Peace. I got blinded by the light.